Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and always profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. Today's date, Thursday, March 20th, 2014. Markets are in rally mode today after getting slaughtered yesterday afternoon on the back of the FOMC policy statement. Janet Yellen came out and talked about interest rates going up possibly as early as 1 year from now. That was earlier than expected, and the markets did sell off on that. However, today on light volume, we've done 80 million and it's almost 3 p.m. The markets are bouncing back pretty tremendously. And the amazing thing about it, on a technical side, this is just totally spectacular. The markets have rallied back, right? But they came right up to where that announcement was made, right here. See, this is where the announcement initially was released at 2 o'clock, 2 p.m. Eastern Time. And then here's where Janet Yellen made that comment. And they've come back to that high and hammered on it multiple times, but have not been able to break through. That is spectacular. That is a technical level that we must respect. And what it's showing us is the market has many sellers there that probably were in prior to that announcement and are selling for a break even right now. And that's really why. Remember, when a market is having trouble at a resistance level, it's because there are sellers at that level. And so needless to say, there's a technical level there, and what's happening on a fundamental side is the sellers are selling into that point. And you saw it once here and once here as well, and again, just in the last 10 minutes or so, the markets have backed off. Now, we're still very near the highs, but I wrote an article today that was published on our Rant and Rave blog, and it was very simple. It was how to recognize which direction this market is going to go in the next week or so, in the next few days or so. And all you need to do is follow this high and this low. As long as the market trades in between these two pivot points, you want to focus on a neutral type market. Maybe even a little downside because technically it's inside bar price action, but more than anything, neutral. If the markets close above this high from Fed Day, bullish bias should be had. That's called a breakout. That's a negation of the downward move, a 100% plus negation, and that again is a bullish signal. If on the other chance, or on the other side, the markets come down and take out this low, that is extremely bearish. So these are the things you want to look at. And right now we're trading very near these highs. So, right now it doesn't seem far-fetched to think that the market could pop up, end-of-day buy program, or a gap up tomorrow. But really watch this, folks. And what's interesting about these highs as well, okay? What's interesting about these highs is that if you zoom out, look at this. Couple things. This trend line has to be respected. Comes from the all-time high on the SPY to this pivot. That's what we ran in right there, and that's why we pulled back today off of those two pivots. And also, the move down from last Thursday. Remember the big drop a week ago from today? That gap up in the reversal, which we confirmed technically on Friday before the bounce back Monday and Tuesday leading into Wednesday's sell-off. Well, this is still a major level because all this price action is all inside of that move as well. So there are a couple different things we want to focus in on the charts. But right now, again, I'm keeping it very simple. Very, very simple. Let's watch the highs from yesterday right here, from what's just before the Fed announcement, and the lows from the low yesterday. Which way does the market break out? That's what you're focusing on. That should really keep it simple for all you home gamers that are just trying to learn the charts. All right, what else are we looking at here today? And again, I think that's the most important aspect as we trade in this market. And the markets have pulled back a little bit off that level, which is, again, significant resistance. But just going over a couple charts, I wrote an article yesterday, actually, on the Rant and Rave blog, and talked about how bearish Facebook was, and how the price action and the chart and everything was telling me it was going to go lower. Now, on a day where the markets are up pretty nicely today, where the NASDAQ especially is up about 16.5 points, Dow's up 108, S&P's up 11, you would think that Facebook would be up today, right? Well, let's take a look at Facebook. Facebook is just off the lows, down $1 on the day. Now, again, if you look at the daily chart here, take a look at this, guys. Look at this bearish consolidation that's beginning to break down below the 20 MA on the daily. This stock, again, I wrote an article and gave you these levels, but ultimately this is where this stock is going. Target 1 right here. Target 2 is gap fill down here. Target 1, target 2. Now it'll have a little bit of a bounce off the 50 MA. There's no doubt about it. The 64 and a half, 64 and a quarter area, you should see a little bit of a bounce there, but that's still about $3 to the downside. Okay, so that should be lock and loaded right there for a move down into that range. But after that, then you're going to start to look for this lower level as target 1 and target 2, and this is where you want to start to buy Facebook. Once you get down to about $55 to $54, the 200 is going to rise into that. You have a lot of pivot tops in this range right here, this pivot low here, this pivot low before the breakout. That'll be the big area for a buy. All right, so again, just trade the charts. One thing I said on the radio yesterday, I was on, my normal spot in the afternoon after the bell, and, I do a morning spot during the week as well. So Monday through Friday, I'm on in the morning and in the evening, and then I have my Sunday show in the Money Stock Market Action on 820 News Talk Radio here in Florida. And I said yesterday that the markets themselves, would be kind of in this groove of just being up and down and up and down. And I said yesterday, and even the day before, I said, listen, when the markets pop up, I'm shorting the markets. And then we get this down move, and I'm covering some of my shorts. And then we go back up, and I short it again. And they come back down, and I do that again. And that's really, as long as that's working, you can keep doing that. So on the SPY, for instance, guess what? I picked up a few more shorts today. All right, now just small positions on the S&P that, I've been buying, or I should say I've been shorting and then covering, shorting and covering. Now I have core positions that I'm holding with Research Center members, but there's nothing wrong. If you can see the chart and you can see the levels, there's nothing wrong with taking the shorter term trades on the charts. And if we go back to the intraday chart here, for instance, yesterday when we were down into this level, I covered some at the 200 yesterday, and the rest here, I took my money. And then as the stocks have rallied this morning into this level and into this afternoon area, I've shorted the market again. So just kind of rinse and repeat, and I've been able to make quite a bit of money, a couple $1,000s every time we're falling here, very easily by just doing that. So just, this is something you just want to pay attention to, this type of price action, and I think it does help us overall just continue to kind of wait for the bigger move in the markets to occur, while the average investor is sitting on the sidelines, and they're not up or down this year. I mean, make sure of that. You make sure you understand that. And if you go to our track record, which will be available on our new site, our new website, you can see it, and as soon as we launch, I think we're launching about a week from Friday or so as a final date that's in stone right now based on getting everything checked out and done. But you'll be able to look at our track record, our live updating track record. And right now, for the year of 2014, net gain 118%, with a loss of 37%. Net gain is 81% so far, and that's through 2.5 months. So you can just see the market, again, the average investor is just going sideways. We're just continuing to kind of ratchet profits into the books. And we haven't even hit that many home runs this year. It's more just been 5% winner, 10% winner, 3% winner, 7% winner. But it adds up when you find the charts. Now, once the bigger move comes, that's where we're going to score big. And that'll come very soon. But in the meantime, don't force it. Just, take 5%, take 7%. Nothing wrong with that gain, right? So markets, again, just getting a little bit of a bounce back. Again, interesting today. One thing that's catching my eye is that the Dow Jones Industrial Average is leading the market percentage-wise, with the NASDAQ lagging. And what's interesting about that is that the Dow is the safety stocks. That's like the dividend payers. And the NASDAQ is the high-risk players. So it's interesting that the high-risk plays are kind of on the sidelines now. Also, the financials are leading the market today. JPM is having a monstrous day today. Percentage-wise, nice move here. 3% move, $1.80. And that's actually a nice little rollover, by the way. But very nice move on JPM, and the reasoning behind this is, at least the thought process behind the short-term move, which won't have a long-term impact, but short-term rates are going up, and that's good for banks because then they can make more interest payments. Naturally, if the rates go up and it hurts the overall economy, then that's bad for the banks, but the market doesn't think in long-term issues. It's very short-term. All right, guys. Again, nice little rollover on JPM here, and that's probably why the spiders are getting a little bit of a rollover here as well. Just very minor. I mean, this is about as minor as you can get. If we break the 20, you have a chance to go down to the 50, but I don't even think the volume's big enough. I mean, look at the volume here just into the last 3 hours of the day or so. We're just into the 3 o'clock time frame, and it is, I don't know if right now it's about as light as it's ever been in this market. So, conviction on the buy side, I don't know. It doesn't look like conviction to me. Especially with the Dow stocks leading and the higher risk players lagging. But needless to say, we trade the charts, and let's see what happens in the coming days. Have a great afternoon, great evening, folks, and I'll talk to you soon. Take care.